Hello and welcome back to my channel. Today we dive into a topic that's been buzzing on TikTok, the state of taxation in America. Guys, you all will agree with me that this has had an impact on everyone. From entrepreneurs or everyday citizens, we all feel the impact of the taxes. Join me in exploring the dynamics of taxation, from concerns about fairness to its implications on our wallets and businesses. Now, in this number of videos I've compiled for you guys, different people share how this is really affecting them. Is it just me, or American taxes are just too much? The US government consistently robs American citizens of their hard-earned money, using every single backdoor that they could possibly find. Let's navigate this complex landscape together and discuss how we can engage in constructive conversations for a tax system that aligns with our collective vision. Hit subscribe and let's get into it. I will be right back. Take a look at these videos.
I urge American citizens to listen to my message and listen to my message closely, because things are truly getting out of hand. The U.S. government consistently robs American citizens of their hard-earned money, using every single backdoor that they could possibly find. Let me paint a picture for you. You've worked 2 weeks, that's 80 hours, you get your paycheck. Off rip, the U.S. government is taking federal and income tax. Depending on what state you're in, they're going to take state tax. You're also required by law to have health insurance, for just in case you get sick. If you don't have health insurance, you'll be penalized by the IRS at the end of the year. And with health insurance, you're required to pay a monthly premium, but your monthly premium does not go towards your deductible, nor does it go towards your copay. And if you're someone who drives in the United States, you're required to have car insurance, just in case you get into a car accident. And you're also required to pay a monthly premium on your car insurance, which does not go towards your deductible whatsoever. If you're one of the lucky Americans to be able to own a home in the United States, you're also required to pay property tax on that home every single year. I've even seen public state parks that ask for payment upon entry, the parks that we pay to have maintained. And that leaves me with the question is, why do we continue to accept the bare minimum from our government when they ask for the maximum from us? And I know I'll have people jump in my comments and say, that's just how it is, that's just how life works, the government does this for us, that for us, blah, 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 blah. At one time in this country, slavery was legal. At one time in this country, women weren't allowed to vote. But somebody had to stand up for change. Screen, it's time for us to stand up for change. Because right now, it's a mess, and nothing's working out in our favor. So if you want to stand on the wrong side of history, you can do that. I don't know who else is with me, but I'm on a mission for change.
Americans need to start throwing tea in the harbor again, because it is fraudulent how much we're being taxed, and I don't think enough people realize it. So the median American income for a single person is about $75,000, and in that tax bracket, 22% will be paid in federal income tax, and then an average of 8.9% will be paid towards state income tax. But no, it doesn't stop there. After we're already taxed on the money we make, we are also taxed on everything we buy with that money. So sales tax is between 5 to 7% on average. And then to get anywhere we need to go, we obviously need to buy gas, which is taxed at about 18.4 cents per gallon, and that equates to about 5% tax on gas. And that's only using the average gas price, which in other places like LA in this photo here, it can be much more expensive. So just including income, gas, food, and clothes, the average American is paying $24,000 in taxes. And then we're taxed on literally anything else we want to do. If we want to move and sell our home, we have to pay an average of 25% tax on that. It's time to throw the tea.
This headline, $100,000 salary feels like $36,000 in New York City. This should outrage you, because $100,000 is actually a lot of money, except when you're living in Manhattan. This is actually based on a survey by Smart Asset. So let's actually look at some of the places in the United States where $100,000 actually does go a pretty long way. In Memphis, Tennessee, $100,000 means you're taking home $75,000. That's pretty good. In Oklahoma City, it feels like $70,000. In St. Louis, Missouri, you will take home $69,000, but it will feel like $80,000. But the state where you get the most bang for your buck with $100,000 salary is Texas, because the cost of living is low and your money goes a long way. But then you have to live in Texas, and it doesn't support reproductive rights, so that sucks.
Yes, it's annoying to file U.S. tax returns living in another country. You haven't been to the U.S. in 12 years, but if you don't file your tax returns, IRS can give penalties even if you don't owe any money. You probably don't owe any money unless you earn over $112,000 per year, but you can still get penalized for not filing the tax return. You may not be able to renew your passport, so unfortunately you're going to have to file tax returns every year. It's an annoyance that every U.S. citizen has to deal with, wherever they live around the world.
Are you aware that the United States is the only country that makes its expats still pay taxes to the United States as well as the taxes in the country that they still live? Literally, if you are British and you decide to go work anywhere else in the world, you don't have to pay taxes to the UK. You have to pay taxes to where you live. You're benefiting from the services and everything of the country that you live in, so it makes sense that you pay taxes in the country that you reside. Oh, but United States can't let you just do that, can they? I would have to give up my U.S. citizenship, which I do like still being able to vote, because I feel like I can counteract some of the crazy. But this is very frustrating.
Ooh, do not forget this part, honey. Do not forget this part. So wherever you go in the world, if you are an American citizen, you are still obligated to declare your taxes and in some cases pay your taxes, despite that you're not even earning money in the country anymore. So you will always have to file your annual tax return just like you did at home, but the difference is that you can qualify for the foreign earned income exclusion, which basically if you make under a certain amount, which is around like $100,000, I think $110,000, you will not be taxed on that income. So you will not have to pay taxes on it, but you do still have to declare it. And so yes, when I lived in Italy, I was paid in euros, Italian salary by an Italian company, and I essentially did have to declare my income, include my pay stubs to have proof of that income, but I did not have to pay any taxes because I was making well under that cap. But yeah, do not forget this because they will get you for that.
Americans are getting with this new crypto tax law. Here's everything you need to know. If you're a US citizen after the 31st of December, which has gone, if you have over $10,000 worth of cryptocurrency, you have to report it within 15 days. And this is to avoid felony charges. So this is written in public law, as you can see here. If you receive over 10,000 or more in crypto, you now have an obligation to report the transaction, including names, addresses, numbers, to the IRS within 15 days under threat of a felony charge. This also comes after a new law has also come into the US. Financial Accounts Standard Board have put in a clause where companies now have to declare all crypto that they hold as a business. What do you think about these new tax laws? Is it fair? Is it not?
Now, in recent times, discussions around taxation have gained traction as individuals and businesses express concerns about the increasing complexity and potential economic impact. Some argue for a more transparent and simplified tax system to enhance understanding and compliance. Others highlight the importance of equitable distribution and how certain tax policies may disproportionately affect specific groups. Exploring alternatives such as progressive taxation or reviewing deductions is part of the ongoing dialogue on finding a balance between funding public services and minimizing the burden on taxpayers. As we delve into this multifaceted topic, remember that informed discussions and constructive feedback are crucial for shaping tax policies that reflect the diverse needs and perspectives within our communities. Now, as we unravel the complexities of taxation, it's clear that concerns about fairness and efficiency are at the forefront of public discourse. Many individuals find themselves navigating intricate tax codes, grappling with potential impact on their financial well-being. One prevalent concern is the call for transparency in tax systems. Clear and understandable policies not only empower citizens but also foster trust in the government. Simplifying the tax code can reduce confusion and make compliance more accessible for everyone. Now, equity in taxation is another hot topic. Critics argue that certain policies may disproportionately burden lower income individuals, while others suggest progressive taxation as a means of ensuring a fair distribution of the tax burden. Now, striking the right balance between funding essential public services and alleviating financial strain on citizens remains a challenge. Now, changes in US tax laws has indeed had a significant impact on US citizens. These changes have affected various aspects, including income tax rates, deductions, credits, and other provisions that influence how individuals and businesses report and pay their taxes. It's essential for US citizens to stay informed about any updates to tax laws, as these changes keep on impacting financial planning, investment decisions, and overall tax liability. Now, here's how the system is supposed to work. You pay taxes to the government pulls that money and uses it to provide the people with essential goods and services that they need. But in America, it's a different system for getting the things people need. Take healthcare. Now, people pay taxes to the government, and the government gives our money to a middleman for profit. Insurance companies or for-profit health providers, and the insurance companies provide health coverage in exchange for some more money from the people and a deductible that covers not everything. Certainly not your teeth, your skin, or your eyes. It's a pretty good system if you own an insurance company. Companies like United Health and Aetna collect 70% of the healthy plan revenue from government programs. Humana 90%. Now, these health plan businesses would not exist without people's tax money, and it's not just healthcare, it's pharma, oil and gas, higher education. Taxpayers subsidize these industries who then take their profits, and then people still have to pay money for so-called free market rates for their product. Now, the biggest issue is this: when people pay taxes on their money, they get 50% of that money that you go to buy something at the store and pay taxes on that with the money that has been already been taxed on. Then that money, after the tax, gets taxed by the owner of the store, who now also pays tax. There's so much tax on tax on tax, and then the person who worked for the money is left with absolutely nothing. Now, are taxes going up year after year without any respite? Have they wiped out the gains in income that Americans have won over the past several years? Are the rich escaping their fair share of taxes? Now, many Americans believe the answers to all of this is yes, and much more. But to be sure, the tax system is complex and different sets of figures can point to different conclusions. But statistics gathered by the Internal Revenue Service and the Non-Partisan Congressional Budget Office and Joint Committee on Taxation and reviewed by private analysts suggest that many popular notions about the tax system are myths. But is it true? Are they really myths or they are true? Now, here are some 5 little known facts about taxes and inequality in America. A report by the U.S. Congressional Joint Committee on Taxation, JCT, highlights 5 regressive elements of the federal code. These include: number 1, low-income Americans face higher payroll taxes rates than rich Americans. Americans with less than 5-figure incomes pay an effective payroll tax rate of 14.1%, while those making 7-figure incomes or more pay just 1.9%. Number 2, long-term capital gains and qualified dividends, both of which are forms of capital income that are taxed at lower preferential rate, overwhelmingly accrue to the rich. Now, the richest 0.5% of taxpayers receive 70.2% of all long-term capital gains and 43.3% of all dividends. Pass-through business income also overwhelmingly goes to the rich and benefits from an unjustifiable loophole. Number 3, the state and local tax deduction is extremely regressive. The SALT deduction benefits 75.1% of taxpayers making $1 million or more, compared with less than 1% of those making less than $30,000. Unsurprisingly, the average millionaire deducts $317 for every $1 deducted by the very lowest income Americans. Number 4, the mortgage interest deduction similarly is skewed toward the rich. The average amount deducted is $13,061 for those with at least a 7-figure income, $2,886 for those with a 6-figure income, $274 for those with a 5-figure income, and just $33 for those making a 4-figure income or less. Number 5, progressive estate and gift taxes play a dwindling role in the tax code. Estate and gift revenues have averaged just 0.1% of gross domestic product (GDP) since former President Donald Trump's Tax Cuts and Jobs Act of 2017, equivalent to just half the average revenue from recent decades and 1/3 of the average from the decades following the New Deal. Now, while the richest Americans pay the highest marginal income tax rates, that is the highest tax rates on their last dollar of income, this fact needs additional context. The very richest Americans pay lower payroll tax rates than ordinary workers, and when the richest Americans pay income taxes, they are often taxed on only a portion of their income, while the overall U.S. tax code is still moderately progressive. The figures below show that substantial elements of the code are regressive, thereby contributing to high and rising inequality. These regressive elements will need to be corrected even as the much-needed Inflation Reduction Act is being enacted into law. But what do you have to say about this issue? Share your comments in the comment section down below. Thank you for watching and see you in my next video.